Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Thick. Got a really busy show today. So we've got the earnings, of course, Netflix, IBM lead the way, but we got a few others as well. Plus, we have to talk about the cannabis stocks because today is the day that it is legalized federally in Canada. So to talk us through that, we'll be joined by Alan Brochstein coming up here at 8:15. He's the author of our 420 Investor, founding partner of New Cannabis Ventures, and our go-to cannabis expert at 8:35. We'll be joined by Scott Redler, the chief strategist at the T3 Trading Group. And then at 9, we have a special guest in the office with us. A guy who's been on our show before, Soueidan. He is he's the president of Geo Investing. He's a small cap and micro cap investor. He's going to talk us through how he does his research for long-term investments. So we got a lot to get to on our show. Joel, start us off with what's happening in the overnight session.
We're giving back some of yesterday's gains, down 11 3/4 handles at 28.06. We went off the board here at 28.1775. So there's a good target on the upside. Crude in the red here by 46 cents at 71.46. Just got through Monday's high, which was 72.28, and repealing. We got some pretty good support in crude in the lower to mid $70 handle. Gold down $1.90 at 1229.10. Silver down a penny at 1469, and Bitcoin still hanging out at 6,400, 6,500, actually down $7.50 at 64.27. Triple D, good morning to you. And big day over there in Canada. Give us a live update from Canada.
Oh, yes. Everybody has their morning joints with their coffee here this morning. So it's an exciting day to be Canadian as we have officially legalized pot here this morning. Again, I'll go to my little card to make sure I know what to do this morning as pot is now legal. And
so where do you want to start? You want to talk about yesterday?
We got to start with the pot stocks again because it's legal in Canada here today. And holy cow, did they pull the rug out from under the Johnny-come-lately investors who bought yesterday. All those pot stocks were up 7, 8, 10% in the pre-market, looking like, ahead of obviously the legalization here this morning. And man, about 10 minutes after the open, they started selling them, and they did not stop selling them. So bring up Canopy Growth. This is one, that really got hit there. It got up to 59.25 just a few minutes after the open yesterday. And then it went straight down 7 points. 7 points knocked off in a matter of 15 minutes. So you're talking a 15% move. It wasn't only that one. It was all of them. CRON, same story, got up close to $13, ended up going down to 11 20 minutes later. You can go over to the Canadian ones if you want, which is Aurora or Afria, same story. You can look at Tilray, same story. Tilray was up near 175. Actually, it was even, I think, higher than that, up to 178. Went all the way down about 20 minutes later to 151. So talking about 27-point fall. Incredible move. Makes me think, man, I don't know if the top is in here on some of these, but short term, it was definitely buy the rumor, sell, we'll say right before the news. And they're selling them here again this morning, so no relief in sight as we're looking at just a live update on the ones in Canada trading down, but also CGC over here down 4.5%. Chrono, CRN, down another 6%. Tilray, down another 10 points here this morning, down 6%. And Bev, which one of those we follow in their chat there, it's down another 5% here this morning too. So it's an ugly morning for the pot stocks, despite being legal now in Canada.
Well, I think when we talked about it on the show, I think the conclusion was, it's opening. I mean, is it immediately going to lead to the bottom line for these companies? Is it going to take a quarter, 2 quarters? I mean, some of these have no earnings or are losing money. I think the only, this is after the fact, Jack, the only thing you could really look at is like your pre-market highs and where the market was. And I'll just use CG's Canopy Growth as the example. You were just hanging out 59.5, 59.60, made a pre-market high at 59.65. So a lot of times with when we're talking about these pre-market levels, you want to see it, boom, take out that pre-market high, go 60, go 61, go 62. If not, if you were just using the opening as a cue, you opened up at 58.75, you snuck into the $59 handle, not by much, 59.25. And then coming back down to, you would have been super quick after that open, but coming back down through that open, everyone that was trapped from the pre-market and, whatever, they bought it over the last 2 or 3 days, hit the exit button. I would just keep an eye on daily lows, and CGC has not hit its 2-day low yet of 50.32. I would keep an eye on that, because if in fact you lose that level, you fall into the 47 handle. 47.74 is your 2-day low.
I don't know what to say, but I'm going to say evaluation has always been the issue in these, and that's going to continue to be the issue. We don't know how much they can grow, but if the story gets hot again, these things go. And that's just the way it works. What time's Alan coming on?
8:15.
Okay, so let's move away from the pod stocks for 8 minutes. We'll come back and we'll ask the big questions down. Brochstein, we know he's the analyst in the sector that knows these companies on a fundamental basis. So we'll get that information from him in 8 minutes. Let's go to the big daddy of them all that reported last night. It is Netflix. It is lifting in the pre-market, although giving back some of it, not all of it. It got up close to $400 here last night. It's trading at $382. Spencer, details.
All right, Netflix just continues on a tear. Q3 EPS 89 cents, beat the 68-cent estimate. Their sales slight miss, but basically in line, $3.999 billion versus a $4 billion estimate. The Q4 EPS 23 cents. That's not comparable to the estimate. However, sales $4.2 billion is in line with the estimate there for the Q4 guidance. They added 9.4 million subscribers in the last quarter. That is basically the population of Michigan. They added 9.4 million subscribers in the quarter. They continue to add. That's the big number there, is the 9.4 million. They continue to add every single quarter.
Stock loved again, but one thing I will say on how high did we get after hours?
405 actually, Dennis. 405 after
405, over $400. We got within 15 points of a new all-time high here on this. It's incredible. But let's strike that laugh from the tape and let's just look at where we're trading right now, because we got a significant level that this stock needs to get over, and that is 385. If you go back, the big down day, I think that was after earnings there back in July. 385 was the high that day. If we go back just to a couple weeks ago, we got up to 386, 387, 386.11. So call the whole area 385, 386. This thing needs to get above there for the bulls to really get control of it. And if it opens near like 384, 385 and starts to crater, there is the possibility that that old resistance holds again. So we are now below that resistance point, and that's the bogey for me.
I need to clarify something. For Q3, for the last quarter, Netflix added just under 7 million subscribers. The 9.4 million was their guidance for the current quarter. So the Q4 subscriber guidance was 9.4 million. The Q3 guidance that they already had was just under 7 million. Thank you for pointing that out in the chat.
Joel, that's my level. What's your level? Did I steal your level? Did I steal your level?
You did, Dennis, but that's okay. That's okay. It's I was just looking after last earnings report. You had a gap 385 to 391.75. We are trading below that, so I'll even use that day's high of 385 all the way up to the low as a sell zone here for people that bought it after that report, and has not been back up to that level since. So we talk about gap fills. I want to see what happens there. Of course, psychological number like 400, but it's really tight right now, Dennis. I mean, since it hit that 405, look at the trading range. And this was for the remainder of the after hours and the pre-market this morning. You got a trading range from 378.33 up to 386.70. So, I mean, it's a 6-point range. It looks tight when you have a big move out of it, but under 378.33, you got a lot of real estate to give back on the downside. But I can really only give you a sell zone there, Dennis, and that's from that gap area. Total agreement with you on that one.
Failing to bring up the tech stocks really rallied hard last night on this. I mean, you had a full tech rally at 410 where the Qs were trading up another $2 or $1.50. I think it was actually over $2. And you looked at stocks like Apple, you looked at stocks like Microsoft, all ripping higher. That rally was faded, and they are actually all trading in the red. So it's actually surprising to me a little bit. This market is full of surprises, Joel. I was very surprised by how strong the rally was yesterday, and I'm actually very surprised that we're showing weakness here this morning on those good Netflix numbers. But across the board, we're actually seeing tech stocks show some weakness, and the S&Ps are trading red. If you would have told me, at 359 yesterday that Netflix was going to be up 40 points and the S&Ps are going to be red and the majority of your tech stocks are going to be trading in the red, I'd have been scratching my head and saying, no, that's not possible. Well, it is. So Netflix not bringing up they brought it up last night, but if you were selling that tech rally last night, you were rewarded here because Apple was trading up over $1 last night. Microsoft was trading up over $1. You had a lot of the smaller guns trading up significantly as well, all giving it back.
Yeah, I mean, you're right. It's not pulling up the entire tech sector. I mean, very specific news, right, to the issue. So it's not pulling everything up. I mean, you got to expect a little red here. I mean, after that rally yesterday.
Is that what it is? Profit taking here?
Yeah, hell yeah. I mean, also the SPOO's got a little juice too. They went up to 24.25 and you're pulling back, but man, oh man, if you didn't think, if you thought the low was in that day, we made the 12.25 low and you've been accumulating stock, you've been flat to that point. I mean, what a great rally to sell into today. I don't think, giving some of it back is really not a big deal, but why not, man? Why not trim some profits especially if you bought last week or you had been waiting to lighten up ahead of, just on any kind of rally and a rip. That was a rip. So that's what I see as the reason for the decline today.
Let's go to Big Blue. It's making shareholders more blue.
Oh, boy.
Thankfully, I'm not one of them. Spencer, details.
Yep, IBM reporting yesterday after the bell. Q3 EPS $3.42. That beat the estimate by 3 cents there. Sales 18.7 versus a $19.1 billion estimate. So a larger miss on the sales. They reaffirmed their guidance for the fiscal year. The EPS has a range of just about $13.80 there. So a beat on the EPS, slightly miss on the sales, and they're reaffirmed fiscal year EPS guidance.
They make a ton of money. Stock is just hated, though. Bottom line, we've said for a long time this market doesn't matter. It's all about the top line. Top line not growing. Top line sales in this market did not want to see that. And they're wondering where the growth is coming from. And if it's not growing, they're selling it. And we've saw stocks, go down to P multiples of 3, 4, and 5 in the case of Micron. They're not growing the earnings, or, in the case of Micron, they were. It didn't even matter. That it's out of favor. So it's all about the top line. Top line disappointing. That's why Big Blue is trading down here in the pre-market.
Down $6.48 at 138.64. Trying to put a bottom in here. You have someone bringing in some stock here. Pre-market low is 137.75. We're bounced. We're a buck off that. If you go to your monthly charts, you'll get a little bit of confirmation on this area. 137.45 was your June high. 138.20 was your July high. Great area to cover short. I'm not sure about initiating along at that area. Not much underneath that, but 138 has shown support in June and July.
All right.
Got to hold that low. If it does not, stocks in the world have hurt.
All right, it is 8:14. Let's take a quick break and grab Alan Brochstein, author of The 420 Investor and founder of New Cannabis Ventures. We'll be right back in a moment with Alan. All right, welcome back, everyone. Pre-market prep, Spencer Israel, Joel Elconin, Dennis Dick. You can see now we're joined by Alan Brochstein. He's wearing a tie for us this morning. He's the author of 420, an investor, the founding partner of New Cannabis Ventures. Alan, big day for you today.
It's been a big week, big month, big year for sure. Good to talk to you.
So what is today like from your point of view? You're obviously a longer-term investor, but just looking at the price action recently, what does today mean for you?
You know, it's funny. It means a lot in some ways from an investment perspective. It doesn't really mean a lot at all. And there's a lot of eyeballs coming in here. I have a thesis that it's actually probably better for the United States than it is for Canada per se. But we can talk more about that. But it's just another day, really. We've had a really nice run here that started in August with Constellation putting billions of dollars into canopy growth. It's really fueled a lot of interest in the sector, and obviously everybody's been looking forward to this day. It's, you know, we've talked about this before. It's an extremely disappointing rollout, but it's only going to get better. Your listeners can go to the Ontario store and see exactly what I mean. It's terrible. In Ontario, the largest province, you can only buy online. In the other provinces, there's like one store, a few stores, 17 stores in Alberta. So it's not a great experience. It's nothing like Colorado in 2014. And the real issue is, I think Canada is really smart to go slow and make this right. So let's give them credit for that. But the real issue is what they should have done is allow retail distribution of medical cannabis last year before this. And then it would have flowed a lot better. Now we're like, it's a whole new game. We're moving from a system of where it's been 100% between the licensed producer and the patient with no intermediaries or anything. The only people that get involved are the delivery people. And now you have a new system where you've got a lot of hands in the middle. They're new. The system's just not great right now.
Alan, you know, similar to when like GE announces a new CEO and they bid the stock up and it has a huge rally. And in the back of my mind, I'm thinking, well, is that guy going to come in tomorrow and change the company around, change the earnings? How long is it going to take? Same thing with these pot stocks here in Canada. How long is it going to take for, you know, whatever part they are in the chain? You know, how long is it going to be reflective in earnings? I mean, the valuations of these things are sky high. When are these things going to grow into their valuations?
So I think the important thing when you're looking at the valuations is to understand that the Canadian legal market is just a small part of these companies. And, you know, we're going to see two different types of companies in Canada. Right now, there's they just gave some more licenses out, 132 licenses, probably way too many, a lot of failures ahead. But we're going to see some big winners emerge. Obviously, people have placed their bets on who those will be. And those companies, the big winners, are going to be the ones that aren't really focusing exclusively on serving the Canadian consumer, but they're more focused on serving the global medical market as well as other markets globally. And so I think it's, you know, kind of very short-sighted we see a lot of this analysis. Well, the whole Canadian market's this big, so these companies are overvalued. It's really about displacing other industries, pharmaceuticals, alcohol, and things of that nature. And it even goes further than that, sports recovery drinks. And we're going to see that. It's going to be slow and methodical, I'd say. So stay tuned on that. But it's a big world out there, and Canada is definitely setting the pace, but it's not the end game.
Let's talk about those cannabis drinks, because we have a few that they follow in the chat. What do you know, like, and do you follow NBEV? I know you follow everything, but like New Age Beverages, there's some of these other companies that are doing the cannabis drinks too. First, give us your thoughts on NBEV, because this one's widely followed, and then give us some thoughts on any other cannabis drinks that you might be following.
So let me warn everybody. So, you know, I'm going back to my original 2014, or actually 2013 when I came in, and everybody wanted to boost value in their stock. They would just say, we're cannabis this, cannabis that. And right now, traders are all over this theme. And you take a stock like InBev, or there's some other ones too. IGC has really popped recently. There's another one. I can't even keep up with them all. Youngevity or something like that. YGYI. these stocks are on fire. You have traders in there, no analysts that are touching them really at this point. And so, I think people pay up because of the NASDAQ or NYSE, MKTS, whatever it is, the better than OTC. And these companies haven't proven themselves yet. This technology is very difficult. I'm not actually following these companies that closely, to be perfectly frank, yet. But they're just basically making announcements, doing trials, talking about doing things. There's no sales yet. There's no proof of product yet. So I'd be really careful with those names. And I think, if you want to look for where it's really headed, stick with the big guys that are able to do this in scale and legally. CBD is not really legal in the United States yet. Hopefully it will be shortly. And what I mean by that is it's gray. It's not like it's totally illegal, but it's unclear exactly. Like Coca-Cola would not launch a CBD drink right now. They'd face problems with the government, most likely. And if the Farm Bill passes soon, it was pushed out a little bit, then it's going to be a game changer. And these little itty bitty companies may have problems competing with large companies in the space.
Which leads me to my next question, because there's, speculation, obviously, since Constellation put the big money into CGC. There's rumors Diageo's sniffing around. There has been rumors about Coke and Pepsi. There's also been rumors about Pfizer and the pharmaceuticals. Do you see some of these big guns eventually maybe coming in and scooping up or putting major investments behind some of these?
Sure. It's hard to predict. It's very clear, and that's one of the great things about the legalization in Canada. Now there's a place where these companies can operate totally freely and not worry about any sort of legal issues. And there's a real possibility. I don't want to predict it for sure, but a real possibility that we're going to have easier access in the United States. So not necessarily federal legality, but more of the states' rights, and to give companies a little bit of comfort that they're not going to get in trouble with the federal government. And so I don't think anybody wants to buy these companies just for Canada. Again, I think it's a play, and you can go back to the transcript of the Canopy Growth Constellation call after that second deal was announced. It's about global opportunities, and specifically it's about getting into the United States. I mean, I don't know if I shared this with you last time. I don't understand why GW Pharma is still independent. If I were a pharmaceutical company and I believed in cannabis, I think there's no other choice except to buy GW Pharma. And, maybe that's why they just raised more money. They want to stay independent. I don't know.
Speaking of the drinks here, Alan, question from our chat. Someone was asking if you know anything about Sproutly. I know you're not always willing to comment on specific stocks, but what can you tell us about that?
Yeah. So look, I'm not a scientist. I actually was at a conference this past week, and I got to meet the CEO and founder of Infusion Biosciences, and we're going to do an interview with them at New Cannabis Ventures in 2 weeks, or a little bit less than that. And he had some very interesting things to say, and that, I didn't want to say that earlier, but a lot of these companies that talk about their beverages are full of it, according to him. And I think that he has a good point. The water solubility issue is very hard to break. It's a very difficult molecule, and so a lot of people mix it with oils and stuff. So they have a water soluble drink apparently. I don't think they're the only ones, by the way. But Sproutly has the rights to this in Canada only. So the company itself that has the IP is a US company, and they have the global rights for the rest. So I think it's pretty interesting. I want to learn more about it. But I think the takeaway is that people should be very careful when they talk about cannabis beverages. It's not like you just take some weed and mix it with some water and you have a drink.
It's a little more than that.
It's a little more than that.
Chad buzzing with some questions now. I don't want to keep you too long or ask you about too many, so I'll just throw one more to you, and that's one we've discussed on the show in the past. MMNFF, MedMen, they're sort of like the most well-known retailer. I guess I would ask you, they're in the United States. Are they well-positioned in Canada as well?
So they do have an agreement with Kronos Group in Canada. So far, from what I've gathered, they haven't announced anything in terms of what they're doing, but the idea is to work with a Canadian work as a retailer in Canada with a producer partner. The laws up in Canada, not surprisingly, are pretty tough. They made it really hard for licensed producers to participate in retail. So they're probably going to have to restructure that deal or bring in another partner or something like that. They need to get the ownership down to 20%, maybe it's 25%. You can only have, Canada's really made it tough. I don't think people appreciate this, that in the past, the LPs captured 100% of the sales. Now that's no longer possible. It's extremely limited. In Ontario, they don't have stores till April, but the LPs can only have one store. In British Columbia, if an LP has a store, they can't sell their own product. In other provinces, they put caps on how much the LPs can own of third parties. So one of the things I've been talking about, and we'll see if it works, nobody's put any work on the retailers. And there's a whole bunch of retailers that are emerging. Some of them are very well-known companies, one of which is Elconin. It used to be Liquor North, not North American Liquors. I'm sorry, I forgot the old name. I just go by Elconin now, but the symbol is LQSIF in the United States, and it's CLIQ. Liquor Stores North America, is the name. And it was a pretty troubled company. We've seen a lot of these examples of kind of troubled companies that are hitching their wagon to the cannabis space, and that's one. Another was Pixis, which bought an LP. We've seen some other stories too, where these companies have just kind of never done much. That's a company that struggled, but they seem to be pretty well positioned. They had 5 of the first 17 Alberta stores that are open. Alberta is one of the friendliest to businesses. And I think people should start to pay attention to these companies. I wrote about that recently. There's several that are publicly traded, more on the way. Hard to tell who's going to be the winner at this point. So I'd be careful trying to pick the winner at this early stage. But that's a whole new area in the Canadian cannabis space that I think people need to pay attention to besides the LPs.
And then last one, Alan, were you surprised to see the general weakness yesterday across the sector in pot stocks? It was only one day, or this morning even, it's only one day.
Yeah. So I was kind of amused. So right before the close on Monday, I sent out a warning kind of to my subscribers. I was like, look, because we have a lot of new subscribers on 420 Investor, not surprisingly, because it's exciting right now. And I said, this is not the way it normally works. Be careful. And I've been saying for a long time, I didn't see this as a huge catalyst for the market. It's just too well known, and we're too developed right now in terms of people with eyeballs on the cannabis space. We have stocks trading hundreds of millions of dollars a day, if not billions of dollars. This is no secret anymore. So there's been a lot of talk about a sell the news type of reaction. If you go back to the elections here in the United States in November 2016, we had a similar type of sell-off right before the election. So I think you had some people jumping. I actually tend to disagree with it. I don't see this as a sell the news reaction. I don't see it as a big get involved either. But I can tell you, there are people coming into the market now. There's going to be a good bid under the market after today.
All righty. Alan Brochstein has been on with us. He is the author of The 420 Investor. He's the founding partner of New Cannabis Ventures. Alan, big day, long time coming. Thanks so much for joining us this morning.
Thanks for having me. Always good to chat with you guys.
All righty.
Thanks, Alan.
All right, checking in on the S&Ps here, Joel.
Just a slow leak here, not anything major yet. 2804 is your pre-market low. We're trading just a few ticks above that. Someone just taking out some bids here. If I hazard to guess here at a place where I think I'd maybe try and look for longs, or at least an initial bounce, is 2794. That's your daily pivot, a number I like to use, and that coincides with the weekly pivot is as well at right at that area. But just a slow leak here in the S&Ps as we approach. Well, what the imbalances, Dennis? Did you get some selling balances in there?
You know what? It's very mixed. Actually, some big buy imbalances too. Let's check out Square, and Square is actually trading in the green here now. 223,000 to buy. Got a little bit of a lift when this information came public, obviously at 8:30 when the imbalances come out. That's a huge buy imbalance for Square. Let's talk about the trading action in this stock,
Sure.
because you were playing it from the puts. This thing whooshed down to $65. It went from 100. So, just recapping all the action.
Yep.
$101.15 back on October 1st. And then 10 days later, it goes all the way down to 65. giving back 36 points, or basically 40%. Now you're seeing the lift. Now you're seeing the bounce. We've seen it for 4 days here. It tried to get up near $80 last night. It's given some of that back. I think that's the next bogey for it. There's definitely going to be an issue of overhead supply here somewhere, but like we said before, it's really kind of open, really to those highs like 86 or 87. So if you're coming here shorting it, you could be early. If you're coming in here buying it, you're kind of late because it was $65 4 days ago. So I think I'm sitting on my hand still on Square here because it's still kind of in the middle of nowhere, although going to watch what it does at 80 just because of the psychological level.
Okay. All right, Dennis, you made a great call on this one, and I tried to trade out of the put spread that day, and I tried to leg out of it. And you said on that day that you thought the low of the move was going to be in, at least for this initial down move. The market was bad. The CFO resigned, and I thought it was going to rally a little bit before it rallied. So, kicking myself a little bit. I'm still very happy, caught some.
Are you out of the?
Yeah, and I didn't go long. Yeah, and it was just tough to leg out of it. So now I'm just looking at $83. I mean, I love my 50% retracements here. Let's see how much we can get up to 83. That represents you had a break from 101 and change down to 65. 83 takes you right back in that 50% retracement area. 86.20 or 86.30 is your 5-day high. 87.76 is your 6-day high. I'd be a target here. I think there'll be a lot of people with targets at 82, $83. First things, we are trading above yesterday's high. So keep an eye on 79 if round number. If it gets below that, may give some back. You can see it did fill a gap that it had. And that was the day that the CFO resigned. So if any takeaway on this, it was a bad market that day. The CFO resigned, all worst scenarios for the stock. And that's the day that that's when it made its low of the move. So be a contrarian sometimes works. You just have to look at the market circumstances and the price action.
All right, 8:35. Now let's take our second break of the day and grab Scott Redler, Chief Strategist at the T3 Trading Group. We'll be right back. All right, welcome back, everyone. We are now joined by Scott Redler, as I mentioned before, the Chief Strategist at T3 Trading Group. Scott, long time no talk. How's it going?
Going well. How you guys doing over there?
Joel's still alive. Joel, he's still alive?
Yeah, I'm still here. All
How
right.
old are you now, Joel?
I'm sorry?
I'm kidding.
He's asking how old you are. He's old. He's ancient, Scott.
All right.
I'm kidding. I'm getting up there as well. I have back problems. My right toe hurts a little bit, but at least we could think clearly for the market.
Yeah. All right. Let's talk about those markets, Scott. We had, that volatility last week. We're coming back here. It seems like. What's your overall position as far as where we are right now?
Well, what we pull back in the S&P cash from the highs, we pulled almost 7 to 8% from the high of 29.40 down to 27.10. So I think a bunch of guys, strategic guys like me, were trying to figure out, can we get some kind of oversold bounce? So yesterday, when the S&P cash reclaimed 27.65, I know it gave me a green light to maybe add to my spiders for what could be an oversold bounce towards the 2800, 2810 level. And that's pretty much what happened. So I know for me, the trades I were in for an oversold bounce, I kind of took off yesterday. And now I need to figure out, can we hold around here and get another push up towards, the 50-day, which is curling down near 28.50. And then if the sellers want to keep control and want lower prices in the next few weeks, they need to reject price there. If they don't reject price there, then, that could have been it. So at this point, we're in earnings season. Everything's going to act specifically. Today, I'm focusing on Netflix. I want to see what type of action we have here. Some high beta tech is already fading from the morning highs. Amazon was up 35, it's up 15. Facebook was up $1.50, it's almost flat. I think Apple's down a little bit. So I think what's going to be important is, does Netflix open up and make its high in the first 5 to 30 minutes and trade down all day? That wouldn't be good for tech. Or does it put a low in and act decently to keep some FOMO out there for the rest of the FANG names?
Scott, Dennis here. I just want to actually go further on that. What are your thoughts here? Because we do see them all trading up last night. It was a tech rally across the board from 4 to 5 o'clock once Netflix reported. And now that we come in and we see a lot of them giving it all back, and Netflix is obviously 25 points off its after hours high as well. What are your thoughts here? Is this just profit taking? Like some of these stocks have, had a pretty good run yesterday all day, and then they got the after hours pop as well. What are your thoughts here on why, we didn't get a pop on all tech when Netflix is up almost 40 points?
Well, guys, it shows you, I guess, that traders are being more tactical, that we don't have the conviction to stay in them for a move back to highs, that some of these things are broken, and that maybe it's an oversold bounce to be sold. So I think traders are doing the right thing by being a little bit cautious. You look at Amazon was just as low as 1685. So yesterday it closed with a high of 1823. So right around 1850 to 1870 is the level it broke down from. And now the moving averages are curling down. So that would be a spot for sellers to at least sell the first time it gets there. And I guess they started selling earlier because it's only up 15 now. So I think, I'm trading the ranges more now. Whenever we break the 8 and 21 day, which Joel, we talked about for momentum rules, the S&P cash broke the 8 and 21 day over 2 weeks ago on actually, what was it? October 4th, when it broke below 28.90. So right at that point, I said, hey, I'm no longer sitting in 6, 7, 8, 9, positions, letting the market make me money. I need to get tactical. If volatility picks up, I need to just trade long and short and not get caught. And obviously from there, it went down 200 handles. So now in October, we still have the elections. We still have more earnings. I'm being more flexible. I'm not just sitting long. I'm looking for trades. I'm looking both ways. And then in a few weeks from now, if we build some new bases and I have a little bit more confidence, maybe I'll reposition for what could be, a fourth quarter move.
We're on the line with Scott Redler, Chief Strategist at T3 Live and T3 Trading Group. Scott, you sent out a text or a tweet. I believe it was a week ago Friday, and it said, "Hey, I know we got to bounce here and stuff, and I just don't think the lows for the month are in, and just be tactical." You can look at charts and you can do different things. That seemed to be like a chart thing, but that also what seemed to me was a feel thing, an experience in the markets. And I know you got some heat on that, but boy, that turned out to be correct. Was that based on the charts or just a good old gut?
Well, it was a little bit of everything. We've been trading a long time, Joel. I've been in the business since 1998. So that's 20 years of watching the markets, trading the tech bubble burst, the financial crisis, mini corrections of 5 to 7%, 20%. I kind of know how bottom setups happen, what needs to be seen. And, at that point, I think we were, just below the 21 day or getting below there. And, you had the Chinese markets 20% off highs. You had Europe down every day. I was like, you know what? This is probably not going to be the low, considering it's the first week of October. We have another week or two where they could shake things up. And, so that was a little bit of a feel combined with experience. And it wound up, I think that low is 28.62. And I think we went below 28.62 and another 150 handles below.
Okay. And now you had to rally, or you had to decline, you had to rally now. So, man, you really got to be tactical. So, are you going back to your moving averages here? I mean, yesterday's low in the S&Ps, the day low is down at 27.45. You're going to have shorts that are think, oh boy, I should have covered last week. What are you just looking to come back to some moving averages here? Are you looking for some double bottoms to form? What are you using to redeploy some longs here on a retreat?
Well, you could use some retracement rules, right?
Sure.
If you look at the S&P cash from 2710 to 2813, that's about 100 handles. So if we're going to see some kind of commitment to this bounce, we probably shouldn't pull back more than a third of that. I think if this bounce is going to be sustained, we should not go back below, in my opinion, 2775-ish, and with the 200-day below, if all of a sudden we start giving up 2775 or 2785, chances are, everyone's going to start talking about a retest of 2710. If we hold up today, and pack and fill a little bit, chances are then maybe in the next session or so, we could take out 2813, yesterday's high, and then, we see a move back towards the 50-day, which is 2850, where then, we get to measure it again. So I'm more about measuring levels. I'm going to be tactical. It's going to be very stock specific, based on earnings, based on the morning setups. And I'm just going to keep trying to net some money until I see a little bit more of what's happening here before I start putting more capital on the line both ways. Some guys might, say, I'm shorting today. This was an oversold bounce. And then we go up to 2850 and they can't hold it for 60 handles. They cover, and then that might be the short. Same way some guys could have started buying last week at 2800, saying, hey, 2800 is a big level. And they got stopped out when we broke the 200-day down to 2710. So in this type of market, what I say is low gross, low net. You bring your size down, you give things a bit more room, and you expect a little bit less, and you be a little bit more defensive than, playing offense. And then in time, we'll figure out whether or not things could start trending again once some of these charts repair.
Scott, let's throw some individual stocks at you. Chad's talking about AMD. Had a nice day yesterday. It is trading up a little bit here in the pre-market session. We've bounced nicely off the 25 area where we kind of consolidated for a day or two there, and now we're starting to look like we want to try to maybe move up near that 30. What are your thoughts here when you look at a chart of AMD?
You just said all my thoughts. We did pull in. We held 24 and change. Yesterday it cleared 26.77. It took back some of the moving averages, closed well. Today you would think a little bit of upside, but right around 30 resistance is going to come back. Does it create a lower high, lower than the recent pivot highs of that 33, 34 from September? And does it need more time? And if you remember, we were all pretty bullish on the stock when it was trending above the 21-day from the breakout above 17 all the way to 34. So right now, it's just kind of like packing and filling. I think some guys did well when it broke 31, because of the size of the move up. So now I just think there's a trade here. And if you're looking for it and you repositioned into this the last few days, I'd be more of a seller than a buyer into the $30 range. Let's look at another chip stock in NVIDIA, NVDA. Lots of consolidation here last few days. Well, not really. I mean, it's bounced around, but the ranges are interesting. What are your thoughts here on NVDA? You know what? This is very important, to note, because if you remember, NVIDIA broke above 285 on October 1st. So that was potentially a breakout looking beautiful. Okay, what traders need to realize is when breakouts fail, fast move or false moves could hurt. So when NVIDIA did not hold that 282 area, that was your cue to get out of the way. That was the same time Apple did a breakout failure above 230. So you look at the chart of NVIDIA, when it couldn't hold that prior peak from September 4th, that was your out. And if you didn't get out there, it broke the 8 and 21 day at 276. So that could have hurt if you were still in it, but hurt a lot less than sticking around for the move all the way back down to 234. So now it's the lower pivot. It kind of just held around here. It held and played with the 200-day moving average that it got back above yesterday. So now, if it gets above and stays above this little 246, it could have an oversold bounce towards 261 where all the moving averages are curling down. So I think traders should be looking to trade these ranges, be a little bit more careful. Stocks right now over the next few weeks have a bit more to prove than when they were just in uptrends and making new highs every few weeks or months like they did for most of this year.
Stock that's getting a lift here right now, just breaking 842, that Elon Musk is going to buy another 20 million worth of Tesla. It's trading up 5 points here in the pre-market at 281. This one has been wild, although consolidating for a little bit there a few days ago. What are your thoughts here, TSLA?
You know, it's kind of it actually looks a tiny bit like NVIDIA did with this lower level. And in my note yesterday, I said if Tesla can get above 264, it's got room to the moving averages around 277. And if it really gets a little frisky, it could see probably close to 300, where you do have, what is that? Which moving average is that? I think that's the 21-day moving down. And then really the line in the sand is where it failed when he settled with the SEC, and that's closer to 313. So I would say just because it's up 5 today, I would not be shorting it. But hopefully you got long yesterday on that candle, and now you're getting a little bit of follow through. But I would say between 301 is kind of no man's land, where it has room to bounce if it wants to get back up there. So if you're just looking to short it, I would wait till 301, and then really 313 is the major inflection point.
All right, great levels as always. Scott Redler has been on with us. He is a chief strategist at the T3 Trading Group. Scott, thanks a lot as always. Great insights, and have a good one.
You too, guys. Be well out there.
All righty.
All right, S&P futures down 11 handles here at 2806.75. We got a pre-market low of 2804. So if you're looking for a lower risk buy here, if you just have to buy the open here, keep an eye on that pre-market low of 2804. Dennis, we did talk about that Tesla a couple weeks ago, and it just looked at that 250 level was just staring you in the face. The one thing that should have been the trigger there is when the market really broke down. That didn't even take out the low. What was the day we broke down? I believe it was last Wednesday. We had Thursday was a meltdown day, maybe 247.77 was the low. Next day, they only got it to 249.03. Now getting a little bump here on the good news, up 505, trading at the highs of the pre-market session. And it just looks kind of open up to 300 here.
It does.
If you're looking for another intermediate level, 294. That was your October 4th high, and then your October 3rd high was 304.60, and of course 300 even sticking right in the middle there.
Man, we just look wide open here again on TSLA. Overall trend is still not your friend, but this stock is such a headline stock. I mean, we can do a technical on anything, but like we've said before, when there's headlines breaking every other day, it seems like something's going on in Tesla. This morning, obviously, Musk buying more stock. Headlines do drive price, so you have to be somewhat careful as a pure technician. If you're just doing a technical, that you're trading a headline stock, and technicals take a back seat when you get headline news. I mean, it doesn't matter what the chart looks like. If Musk says he's buying more stock, Tesla's going higher.
Right.
And that's what we're seeing this morning.
Spencer, so we got some more earnings to cover.
Earnings, earnings and ratings. So let's definitely go back to the earnings parade because there is a few. You want to go to Lam Research? We can go there. Let's go to LRCX because they reported yesterday after the bell, Q1 adjusted EPS of $3.36 versus a $3.21 estimate, sales of $2.33 versus $2.31 billion. So beat on both the EPS and sales for the Q1 figures. The Q2 guidance came in line. The EPS did, and the sales guidance came in line as well.
Pre-market
Joel,
high.
I'll let you go on this one.
Yeah, pre-market high stands at 156. Just looking at the charts here, you could see a daily high at 154.85. So I just use that as a bogey here. You get above 154.85 here. I think there's greener pastures. I mean, they could just pull an Adobe on you. Adobe opened up higher and, of course, had the market going with it as well. So I'm not going to be fading this one, even though it's up $7.
There's life here, but again, this has been a dog trend. Is still not your friend, so just be careful that you don't have people coming in taking profits on what's perceived as a pretty good quarter. So you got major resistance all over at 155, and that's where I think the resistance comes in here again. Applied Materials getting a sympathy lift with it. AMAT is trading up $1 in the pre-market. Again, keep an eye on LRCX if you're trading any of the chip stocks because they're all going to move around with that. One I just want to look at, which is interesting on the chart, is your Western Digital, Joel. I believe you're out of it now, correct? You've been out for a while. Joel bought the low, sold the high, so he's been all over this one. So when we get his opinion here on this. It'll be interesting, but look at how this thing bounced off the September low. We got down at 53.61, and then we tried to get through that 53.60 area, 53.75, 53.89, 53.58. Multiple times it held. And now you're starting to see some life here. So WDC sets up not bad here for a double bottom.
It seems more than a double bottom. I mean,
well, if I'm looking at the monthly.
Yeah,
so
yeah.
September,
The monthly.
October.
Okay. All right. No, good.
Yeah.
Over the last 2 months. I mean, you have it out here, maybe for a swing trade. I don't think I'd be, throwing it in anything super long term, but I do like that you have that, those lows coincided with your September lows, as you mentioned on the monthly chart. Just trying to round here, starting to turn up. Had a good day yesterday with the market. Cleared the resistance at 56. Next target on the upside would be 57.39. And if you're trying it for a swing trade and you're looking for some kind of retracement here, even like a 20 or 30 on a 40 or 50% retracement would be way up there at probably 75, $80 since we got over 100. But definitely good support in here. And I'm not sure when they'll be able to when they come out with earnings or whatever, but I like the chart. And STX, its brother here, doing the same thing, starting around. That's probably been a wild spread to trade, Dennis. Do you have anybody at Bright that plays the STX?
I play it sometimes, STX versus Western Digital. It hasn't responded, but they have an overall from a day trading perspective, there's definitely a correlation there.
Mm-hmm.
And anything that's a nice correlation, I like to, to trade with as well. And obviously, we do in different styles, and sometimes you got to look, and sometimes those pairs break apart and they do their own thing. But from a day trading perspective, they often do follow each other to a certain extent. So Seagate, Western Digital, I think you got a lot of guys that still pair trade that.
All right, back to the earnings. Let's get to the airliners because we had one report yesterday after the bell, and we had some analyst activity this morning. So United Continental, UAL, reported Q3 EPS of $3.06. That missed the estimate by 2 cents there. Sales $11 billion versus $10.93 billion. So beat the sales estimate there. They narrowed their fiscal year 18 EPS guidance. The range is in line, though. $8 to $8.75 is their fiscal year EPS guidance. They gave some fiscal year 20 EPS guidance. That's way down the line. But overall, let me get the chart up here, a miss on the EPS and a beat on the sales estimate.
I mean, this has been one of the best airline stocks. You look at a lot of other ones, and they're off the high significantly. UAL is within striking distance of its all-time high, only 2 points off, where if you look at a stock like American Airlines, you're talking about a stock that's almost over 20 points off of its all-time high, actually almost 25 points off. So it's funny, there's been some divergence here in the airlines from a trading perspective there, where UAL has been a source of strength, and obviously some of these other ones over the course of the last year have not. So I don't know. I mean, you come up here, this 90 looks huge to me, Joel. So I don't know what your thoughts are.
There's a battle going on here at 88. I mean, just the Bulls and the Bears. I mean,
the pre-market.
Yeah. You got up here and you're not giving anything back. You also have some daily highs at 87.92, 87.76, 87.54. So holding 88, very important here, and go up to test that $90 level. If, in fact, you lose 88 off the hop, I think you might have a similar situation that you did in the pot stocks yesterday. But right now, just not give it in. Pre-market high stands at 88.42.
A lot of ratings here. Home Depot, Lowe's. I'll just fly through IC. Spencer, if I miss something, let me know. I was just going to fly through the main ones. Home Depot, Lowe's, downgraded Credit Suisse. Are also negative on a couple of home builders. Downgrading KB Homes to underperform. MTH as well. We were just talking the airlines. Deutsche Bank upgrading American Air, AAL, upgrading UAL, upgrading DAL. Bernstein upgrading Workday, WDAY. Goldman upgrading NetApp, NTAP. Let's bounce over. Was there any other ratings there? Because we're just running short on time, so I want to fly through.
You got most of them. Did you get any downgrades though? Did you mention? You mentioned the home builders. You mentioned Home Depot, Lowe's. Del Taco downgrade at BTIG, Netflix, but we don't really care since they just had earnings. Nope, those are the big ones.
And then also, I just want to have a warning here on the exchanges here today. We had an SEC ruling last night.
I was going to ask you.
Yeah, the SEC ruling, and you can read WSJ article. Just Google SEC ruling takes the aim at stock. exchanges some profits. Securities, I'll just read you a headline from the WSJ because we're in a hurry here. The Securities and Exchange Commission decision blocking higher fees for certain stock market data cast doubt on a crucial and growing source of revenue that has helped exchanges make up for the declining income from trading. Data revenue is huge for and the fees, and obviously I pay a lot of these fees as a trader, are huge for these exchanges. And if they're going to obviously impact them raising them in the future or potentially having to reduce them, this is really bad news for the exchanges. So you're seeing this morning the big ones, ICE, obviously they own the NYSE, they are offered down $1, have not traded here yet. NASDAQ, NDAQ offered down 50 cents, has not traded yet. These don't have much of a pre-market. I would expect some major weakness in these things here today, though. CME is offered down only 50 cents again. Not much happening, kind of muted activity, but this could be one of those sleepy trades where I think if you're, I would definitely think that they show some, well, they can't say anything for sure, but I would think with this headline that they probably show weakness. CBOE is another one. It's trading down $2 in the pre-market, down 1.7%. But just be very, very cautious if you're trading any exchanges from the long side today, because I think this headline has the potential to knock these stocks down.
I was going to ask you about that, Dennis, because it's basically good news for the rest of us, though, right?
But yeah, it's good. I want to pay less fees. So
yeah, it's good news. Good news for everybody, but the exchanges. Who the argument was that they essentially are. It comes down to as an unofficial tax on anybody who has to buy any sort of market data because they just have a monopoly on the pricing. But yeah, I was going to get your take on that.
Oh, it's killer.
Yeah,
I go back to 2007. I didn't pay anything for quotes, and now I was saying, I've got 3 separate ICE accounts. I've got these, and if you're not licensed, you don't have to. They give you a bundle fee, but there's still some fees involved. But I think I pay for market data. I think it's probably like $500 a month I pay. And if you get some high frequency trading stuff, they can get up to the $20,000, $30,000, $40,000 a month. They can just pay for quotes. It's crazy amount of money they make on market data. So this is obviously good news for people who are buying market data. But if you're selling market data, it's not as good a news. And that's why I'm actually surprised exchanges aren't trading down significantly yet. But I think it's a sleepy trade. I don't think a lot of people follow the story. So just be careful with those sectors there today.
All right, going out at the end of the show here, S&Ps are off your pre-market low of 2804, still down 975 at 2808. I'll be focusing on that pre-market low at 2804. See if we can turn back up and test mid-range on the session. That comes in at 2814 and a quarter. Yesterday's close 1775, and yesterday's high just above that. Spencer, are we?
Yeah, we were waiting on Maj Soueidan from Geo Investing. Doesn't appear like he's in the office right now, so we're going to wrap our show for the day. Thanks to our guests, Scott Redler and Alan Brochstein, for stopping by today. We really appreciate it. Thanks to all of you in our chats as well on premarket.benzinga.com and youtube.com/Benzinga TV. Really quickly, want to mention the Benzinga FinTech Summit. I'll be there if you're going to be in California November 14th or around that time. You should come hang out with me at the Benzinga FinTech Summit. Go to bzsummit.com, enter the promo code PMP VIP for 80% off your ticket. And for those of you who trade news headlines, you should check out Benzinga Pro. It's Benzinga's real-time news platform. Go to pro.benzinga.com to learn more about that. Enter the promo code AMPRO, Alpha Mary, Papa Romeo October, for 25% off your Benzinga Pro subscription. And on that note, please remember that everything on our show is for informational purposes only and not meant to be investing advice. Have a good day, folks, and I hope you join us again on tomorrow's show, where we'll be joined by Mark Shagan. Have a good one.